Good morning. I'm Larry Morgan, Senior Account Executive at Archer Financial Services. There's really only one thing to talk about. The European Central Bank had its monthly meeting this morning, and as we've discussed, there's been a tremendous amount of anticipation building up for this meeting because of a speech that its president, Mario Draghi, gave last week. The market's been expecting major changes in policy, supportive for peripheral bonds, supportive for the euro, and so on. And the markets were totally disappointed. Draghi gave this speech last week. There's been a lot of speculation, subsidiary reports, leaks, and so on and so forth about measures that the ECB might take. They took none of those. It turns out, it seems, that Draghi was all hat and no cattle on this issue. They kept their target interest rate unchanged at 75 basis points, 0.75%. They took no action in regard to buying European government bonds, took no action in regard to long-term reserve operations, providing liquidity to banks. None of that. In his press conference, Draghi talked about some further measures that the ECB is going to study and so on and so forth, but it was all very vague, nothing concrete at all. There was clearly a disagreement in the Council, and I would hazard to guess that the principal disagreement came from the president of the Bundesbank, Jens Weidmann, who has been strongly opposed to a lot of the measures that have been talked about. And Draghi was pretty defensive in his press conference, in fact, because there were a lot of reporters' questions about these things. Kept pointing out that he had not said anything specific about bond purchases or anything of that sort in his speech, but it was a clear disappointment in the markets. In terms of market reaction, after the decision in particular, when the press conference began, at first markets seemed to think that something was really coming out of the press conference. The euro shot up from, where was it? From about 122.75. It went up to a little above 124. Same kind of thing happened with the stocks. With the September S&P ran from about 1375 up to 1383. The German Bund bond fell from 134.08 down to 133.29. And then after a couple of minutes, when it became clear that none of these things were going to come, everything reversed, and the euro fell more than a cent, about 1.5 cents. The Bund rallied, stocks fell from 1383 down to about, when I left the desk a couple of minutes ago, down to about 1366 or so. I would expect these trends, these risk-off trends, to continue at least for another day or so as the air comes out of this balloon that got inflated over the last couple of days. Higher treasury bond prices, higher Bund prices, lower stock prices, and a lower euro. Tomorrow morning we have the very important U.S. employment report. The non-farm payroll is expected to be about plus 100 to 110,000. That's not very good. If that's where it comes out, don't expect very much reaction at all. And if it's much weaker than that, that's what happened last month, you'll get another spike upward in Treasury bond prices. I emphasize again, these opinions are entirely mine. They're not the opinions of ADM Investor Services. They're not the opinions of Archer Financial Services. Thank you.